Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Andrew Dinning, who's the founder, MD, and CEO of Sarama Resources, a West African gold explorer and developer focused on establishing a new mining district in Burkina Faso with a focus on the Sanutura Project. Andrew has over 30 years experience in the international mining arena, having worked in West Africa, UK, Russia, and Australia, and has an extensive experience in mine management, operations, and capital markets within the gold sector. Andrew's going to give us an overview of the company and what they've been up to, and also what the sediment is like in Burkina Faso. Obviously, we hear many stories coming from the news around Burkina Faso, but obviously Andrew's on the ground there, so it'd be good to hear his thoughts and what is happening in the country. So that's welcome Andrew to the podcast. How you doing, Andrew?
Good, thanks, Rob. Thank you for the introduction, mate.
Yeah, appreciate your time as well. So I wondered if you can just tell us a little bit about your career. Obviously, I mentioned you've been in the industry for over 30 years. So I just wondered if you can just run us through your career, what you've been doing to where you've got to today.
Yeah, okay, thanks, Rob. I guess my career spans probably more than 30 years now, actually. So I'm a degree qualified mining engineer. I graduated in South Australia in kind of late 80s, which is obviously an eternity ago now. I joined Western Mining's grad program and worked at Olympic Dam. And kind of give a bit of an idea on that, we were just commissioning the mine then. And we went through 2 expansions while I was there. So that was all pretty interesting experience. After having worked at Olympic Dam, I kind of went across to the gold sector in Western Australia and ran a number of underground gold mines there for Western Mining at Agnew, near Leinster, at Norseman, and also in Kambalda. After that, I kind of spread my wings a bit. And really my last job in Western Mining was working on the sale of the gold business to the goldfields. And I went to the UK, did a business degree and started my work offshore from that point. So that was kind of around 2000. From there, I went and worked for a private company in Russia, which is obviously quite a significant change from working for Western Mining. Listed a company in London, a Russian company. After that kind of ran its course, I went back to Australia and based myself in Perth and worked in the Congo, where I ran Moto gold mines. At Moto, we found the Kibali deposit, which is a kind of over 20 million ounce deposit. And I think Barrick rated as one of kind of the top 10 assets globally. And I think it did 800,000 ounces of production last year. So we took that through to pre-development. We were taken over by Randgold and Anglo. After that, we had a bit of time off to decompress and put Sarama together and focused on West Africa and ultimately on Burkina Faso, which is where I'm sitting right now. So
I wonder if you can give us an overview of Sarama Resources, obviously from inception.
Yeah, Sarama has been a bit of a journey for us. When we put the company together, we listed it on the TSX. Moto Gold, which I was running, was TSX listed. So a lot of the seed for Sarama came out of the TSX. We focused on West Africa and put a number of projects together in Mali, Liberia, and Burkina. And then over time, we settled in on our best projects, which is in the southwest of Burkina in the Hyundai Belt, where we very much like the geology and the prospectivity in that region, and it's a fairly well proven belt. So kind of through the course of that time, we obviously did a lot of drilling. We had a joint venture with Acacia Mining, which ended up being quite restrictive in the end, and we bought them out, and so we could move the project forward again. So that kind of slowed us down a bit for a while. But the main project for us is the Sanutura Project. So that's in the southern Hyundai belt. It's about 80 kilometres south of Endeavour's Hyundai gold mine and about 150 kilometres south of the Mana mine, and about the same from Fortuna Silver's Yaramoko mine. So geologically, it's situated, very nicely. That part of the belt has about 20 million ounce gold endowment at the moment, and we believe has a lot of exploration runway. The Sanutura project itself has around a 3 million ounce resource on it at the moment. The project itself, we still think there's a lot of exploration runway in that. The main deposit, called the Tankoro deposit, runs about 2.5 million ounces. Sits in a corridor about 16 kilometres long by about 1 to 1.5 kilometres wide. And that deposit itself, if you apply a slightly higher cutoff grade, you have over 2 million ounces, over 2 grams. And the project itself, about a third of the resource is oxides. So, in the kind of 50 metre range, oxides run to about 50 metres. And 2/3 is over 2 grams. So it's got a good grade profile, and it's got quite a high amount of oxides as well, which really has been our focus for the project in the last few years. We actually did a second listing on the ASX last year. So we're based in Perth, and we always have been. So for us, it was kind of a natural progression to pursue that listing. It's a bit easier to manage, and I think one of the things COVID showed us was that managing a jurisdiction on the other side of the world, managing the capital markets is pretty challenging. So we've got the second listing there. We raised $8 million with that listing, and we put that to work straight away in May last year, and did about 20,000 meters of drilling. It was all shallow oxide focused drilling, and we made a number of new discoveries, and we intersected quite a few zones of shallow high grade oxide material that it's not currently reflected in the resource, but it will be over time.
So just wondering if you can give us what you've been doing, obviously a project overview, and obviously what you've been doing over the last 12 months. Obviously you mentioned the ASX listing. What about the drilling and the PEA?
Yeah, as mentioned, the ASX listing was quite important for us for recapitalising the company. Obviously things drained down quite a lot through the whole COVID period, and also the period from when we bought Acacia cum Barrick out of the project. So that actually caused us quite a bit of pain from a delay point of view, and we're still, some of those things we're still tidying up in country with respect to delays in permit issues and stuff like that. But what we have been really focusing on is the things that we can control. We can't control the international capital markets, but what we can control is the work that we do here. So the first part of last year was getting ready to do the dual listing. Obviously that's created more work for us, and we're still kind of understanding the requirements of meeting both exchanges. But that closed at the start of May last year. A small amount of not small, a reasonable chunk of the money raised went to buying Barrick out of our project to take us back to 100% ownership. And then we kind of launched into the drill program that you alluded to. Most of that was air core drilling, so relatively inexpensive and quite fast. So we drilled 21,000 meters between kind of May and then start of August. Once we kind of got all the results in, and that was all in the Tankoro deposit. So we still haven't drilled our best target yet, which is at Bondi, which is a deposit we bought from Orzone a couple of years ago. But all the drilling at Tankoro, it was shallow, oxide focused. We've discovered 7 new areas outside the modelled resource. Importantly, we've drilled a flat zone that appears to be in oxides, that's extended the oxides to 80 meters depth, which is good from a mining point of view. But it's also very high tenor, and it looks quite different to what we see in that area. So most of the Tankoro deposits is porphyry dikes, and where we get cross structures and dilation zones, we tend to get a blowout in grade and ounces. This area is a later stage event that cuts across the known mineralisation. So we're pretty excited about that, because when we look for analogues in the belt. Probably the closest is Endeavour's Kari pump at the Hyundai mine, and the maiden resource on that was 1 million ounces at 2.7 grams. So we've only got 5,000 meters into this area. It's blind, so we found it when we were looking for something else. So that's pretty intriguing as well. So I think on balance, the drilling went as expected, or probably a little better. Some areas disappointed, but some areas kind of outperformed. And we put out 7 lots of results. Probably, I think the best drill hit out of the lot was 21 meters at 7.5 grams from surface. So I think what that does show is that, there's still a lot of potential there, and there's a lot of potential to find more ounces in between where we've already drilled. So I guess that's kind of the exploration side of things. I guess we sat down in the latter part of last year and looked at what we had resource-wise, and the resource is already through a scale, to support a mine development. And I guess we looked at the equity cost of capital and the best way to take the project forward. We did some internal concept work looking at project sizing, ranging from a 120 to 140,000 ounce a year project down to kind of a mid-sized project, maybe doing 60 to 70,000 ounces a year. Looked at the capex, payback periods, and stuff like that. And I guess one of the things that stood out to it for us is if we optimize a project on an EV per share basis, not necessarily on a project NAV basis, i.e. taking into account our cost of equity to fund the pre-development and the project build, it actually makes a lot of sense for us to do a stage development and start with a mid-sized project that's scalable. So we're currently undertaking a PEA. Obviously, we can't publish in Australia, but we will publish in Canada. That's looking at a staged development, multi-phase development, where the project's established on high-grade oxide material. The current gold price, the economics on that from the internal work we've done look fairly compelling. And even at $1,700, they look compelling, and below that as well, for that matter. So, normally we'd be looking at a 2 gram head grade average for the first 5 to 7 years just of oxide material. So we're doing the work now to basically validate our numbers. But so far we're seeing from that work, the numbers are landing in the range that we thought they would. So we'd expect to have that work completed, probably June, I think, and not sure how long after that we get it out into the market.
Obviously, you mentioned being listed on both the TSX and the ASX, and I suppose it's created obviously a lot more work for you. What are the different requirements, the differences in obviously the requirements between the two exchanges that obviously creates this extra work?
Yeah, well, I guess there's a couple of things here. One, because of the TSX is still our primary listing, and Australia is a CDI, so a CHESS depository instrument. The governing exchange is still Canada. So for the ASX listing, we had to apply for a lot of exemptions from ASX rules, which we did receive. But I guess having just done a small capital raise, that's kind of given us a bit of an insight into, I guess, some of the differences in approach, not only with the different exchanges, but also with the different capital markets, how people think about things. But probably the biggest sticker for us is the 15% rule on the ASX, where you can only issue 15% new capital, including options, before you have to go to shareholder approval. So we're having to do a 2 tranche placement and have an AGM, which we're due to have anyway, but to approve the grant of the second tranche. In Canada, you don't do that. But the process was also in Australia, it's a lot quicker and a lot less paperwork. We didn't issue into Canada, and I know that upset some Canadian shareholders that wanted to participate because the raise was fairly keenly priced. But unfortunately, to have issued into Canadian residents probably would have added another $100,000 to the legals and complicated the raising process. So there's a few things like that. And then on the management side, in Canada, we just have a rolling option plan that gets approved by shareholders, just boilerplate. We do an option grant every year. That's not typical in Australia. So the way we've remunerated management, we'll have to think about how we do that, because it doesn't necessarily align between the two different marketplaces and the expectations. So there's a few things like that we need to kind of work through. But I think for us, we think the ASX and that marketplace, there's been a lot of success over the years of Australian juniors going to Africa, Perseus, West African, Card, plenty to point at. So we think that, understands that Africa as a jurisdiction and probably more accepting of some of the idiosyncrasies of this part of the world compared to Canada. But time will tell, but I do know it has created more work for us while we get to understand things. I mean, one of the things that has happened with the dual listing is we've gone from, even though we're listed on the venture exchange on the TSX, we have to comply with main board rules now from filings and that. So that's created a heap of work for my CFO. So he's been beavering away to get all that paperwork done. So yeah, there's kind of quirks like that as well. Our AGM materials are a lot more comprehensive than what they were and what they should be as well. But yeah, so we just work through it. But if it gets our cost of capital down, then I think the exercise is worth it.
Yeah, certainly. Can you just, obviously you mentioned obviously Endeavour that have a asset quite close by.
Yeah.
I just wondered whether you can tell us a little bit more about obviously the jurisdiction, the area that you're in, and obviously your neighbours, and if there's any synergies around anything that you're going to be doing, and obviously the resource within the area as well.
Yeah, it's I think earlier on I kind of mentioned that we like that part of the world geologically a lot. We've actually got 3 projects in southwest Burkina. One's the Sanutura Project, one's Kumandara, which is a separate early stage exploration play, and the other one's a joint venture with Endeavour that joins our Sanutura Project. That's called Karankasso, and that has about 700,000 ounces on it. They manage that. We've got around 18% interest. We vended some ground in to get that. And then between that joint venture and Sanutura, because Karankasso is kind of an upside down L shape, the Endeavour have another project there called Bantu, and they've just put out an updated resource on that. I think it's 1.2 million ounces, 1.2 grams or something. But there's 2 deposits there. One's a kind of a lower grade thing, I think 1.2, and then they've got another high grade thing that runs 4 or 5 grams. So, and they're about 5 or 6 kilometres from our Tankoro deposit. So that's kind of pretty interesting. We've obviously had a lot of discussions with Endeavour about how this area might come together, and pre-Endeavour it was Semifo. We had a similar discussion. Pre that it was Orbis. We had a similar discussion. So, but they all want to drill it. So I think though the point is that the endowment in that area is quite significant. So just between Endeavour's ground and our Tankoro deposit, there's 3.7 million ounces delineated at the moment within a 6 kilometre radius, and I'd say 70 or 80% of that's within 150 metres of surface. So it hasn't been pushed to depth at all. There's multiple styles of mineralisation as well as you run through that part of the belt. So the high grade in Bantu is different to the low grade, which is different to our porphyries. And I mentioned this flat area we've just drilled that's pretty exciting. That's different again. So we do like complexity, geological complexity, and there's a lot of gold in the area. So I think the ultimate value play in this area is to put it all together. But I think the important thing for us is that, we do have a standalone mine. We think Endeavour's got a long way to go on Bantu before it's of a scale that kind of ticks their box. So it'll be intriguing to see how that plays out, but we'll just push ahead with what we can control. And I think, we'll see where things land with this PEA that we're doing at the moment, but we think a low capital, stage development with very rapid payback and very good, economics is something that we can push ahead and fund. I think that's probably the key thing. Funding projects in Burkina is a challenge. So I guess more will be revealed when we put the PEA out on how we're approaching that. but it is a little bit novel on how we're doing it. But I think, when you look at Sarama, our background, it's maybe a little different to some of our other junior peers in that, my background's operations. Paul Schmiede, who works with me, who's looking after the project, his background's operations. He's a pretty high-end engineer, that guy. And so we're looking at doing a modular build where it's fabricated off-site and, assembled, numbered, broken down, reassembled on site, amongst other things. So, shortens timeframes and lowers the skill level required on site to put something up, and should accelerate the development timeframe and reduce the opportunity for capex overruns and stuff like that as well. So, but like I say, we're working on that now, or should I say Paul is, and when that comes out, I think it should set out a fairly clear picture on how we think the project should move forward within the environment where we work.
And when do you expect to put the PEA out?
Barring any delays from the engineers involved, that's the hardest thing. It's obviously mining's a pretty busy business, and there is, in your business, I'm sure you understand, there's a scarcity of skills that we need. But putting that to a side, I'd kind of hope it's going to be around June. Hopefully kind of end of May, early June, be available for internal review by the board and looking at anything else we need to do. So it's kind of that timing, mid-year. We'll get it out, publish it. We can't publish it in Australia because we're using inferred resources. Probably 2/3 will be inferred, but we can in Canada. It's basically 43101 compliant PEA, done to the full form reports. We'll publish that in Canada. It'll get filed on CEDAR. In Australia, all we'll be able to do is reference that we've done an economic study and the outcome was positive. But anybody who wants to look up the project economics or challenge what we've done, they'll be able to find all the work on CEDAR.
As you've obviously your experience in the gold market, I just wondered if you can give us your interpretation of the gold macro environment at the moment, and where you see sort of gold heading.
Yeah, very interesting question. I think
and pretty open as well.
Yeah, I think it's a question you could ask 1,000 people and get 1,000 different answers. But yeah. I think there's probably a couple of, there's obviously the global macro, the economic environment and US dollar argument and all that. And then there's the whole supply and demand side of things as well. So, given the shift in cost bases, governments wanting a bigger piece of, mining revenues and stuff like that, it's difficult to see much in the way of new production coming online in, sub $1,500-$1,600 gold environment. You just wouldn't get the funding to build something, even if you're a big producer. I think they'd question it. So I think there's probably a flaw there in the gold price on that side of things. If you look back over the last 3 years, gold's probably spent as much time below $1,800 an ounce as it above it as it has been below $1,800. So in a way, you'd probably say, well, there's probably, the last 3 years is this kind of $1,800 an ounce happy medium. And I think if you look at it now, and if you look at kind of long-term gold prices, I think we're probably, moving into a bit of another shift in the gold price. That's what it feels like. I'll say you have the supply and demand fundamentals, but I think overlaying over that is, the global macro picture. So it's not only geopolitical. I think geopolitical incidents have a short-term impact on gold. So that's kind of noise on long-term trends. So, so when Russia invaded Ukraine, gold spiked and then it fell off just as quick. I think I'm more interested in the state of the global financial system. I think the fact that you're seeing central banks, particularly Russia, China, India and whatever, doing a lot of gold buying is fairly telling. There is a push to diversify off the US dollar, but I think that's going to be pretty hard, to be honest. But But I think, there's a race to the bottom with currencies, and the US is part of that. And we're seeing the US dollar soften off. And I would have thought it would have softened off sooner than it has, to be honest. So I guess in that event, I would see, gold price moving up. Where it goes to, I don't know, but I guess I'd like to see it solidify at 2000. I think breaking through the 2000 mark. I mean, I see it drop back through it today, but I think that was important for the longer term picture. But I think there's more reasons for gold to go up than down if you look at it for all the different things that drive it. And if we ended this year, north of $2,000 an ounce, I'd say that's not a bad outcome. Maybe we fluctuate between 2,000 and 2,100 through the course of the year. All things being equal, maybe the range is, instead of being plus minus $1,800, maybe it becomes plus or minus 2,000 for a while. For us at $2,000, like Sanutura absolutely makes a screaming amount of money. Paybacks under a year on what we're proposing. So 2,000 is a good price. Like it's, it equates to 3,000 in Australian dollars an ounce. So, but yeah, I think, when you look at it, the whole global picture, in the supply and demand side, I think there's a pretty strong argument for gold to move up. I wouldn't sit there and say it's going to go to $5,000-$10,000, but if it goes up 10% this year, then I'd say that's probably, that's what I think it'll probably do.
What price would you say where it should be, where a lot of the gold miners, whether you're a gold miner or whether you're a producer or a developer, where would you say they would like the gold price to be and situated and above? Would it be 2,000 or maybe a little bit more?
I think any gold producer now that's not happy with $2,000 an ounce needs to have a good look in the mirror, to be honest. I know cost bases have gone up quite a lot, but also ore body quality has gone down quite a lot as well, which is what happens when gold price goes up. You start mining more marginal gear, and mines that have been shut get recycled. But I would, if they're not happy with $2,000 an ounce, I'd be pretty surprised. Obviously, everyone wants a higher gold price, but I think $2,000 is a pretty good price for gold. I always get concerned when it runs up too quickly, because when things move up quickly, they fall quickly. I prefer just a long-term build in the gold price, and I think if you're an investor, that's what you should be looking at anyway. I don't. You can speculate on gold and punt it, but really, to me, it's a longer-term thing. And then you obviously have different segments in the market. Like we're in the risky end of the market, but the returns are potentially very high to your Newmonts of the world, who just a cash box. So, but I think if you look back to 2000, gold's outperformed the Dow by like 50% or 60% or something. So I think that's kind of the view I think investors should be taking on gold. It's not something you hold for 6 to 12 months. It's something that it's a long-term store of wealth. And I think with all the debasement of currencies now, if you look, when I meet family offices and that, their job's not to get a 20% return on their portfolio. Their job's to preserve the family's wealth, and maintain its purchasing power and maybe give a bit better return on top of that. That's why they all hold a bit of gold in their portfolio, because that's their job, right? So, and I think that's what gold provides over the longer term is that kind of base component in your portfolio. And I think now, you want to hold hard assets, whether it's land or gold or real estate or whatever, because your currencies are buying less and less and less, and whether you're sitting in the UK, US, Australia, it doesn't really matter. It's very noticeable that your purchasing power has declined a lot more than what inflation says it should have.
Yeah, certainly. Agree with everything you said there. ESG, just wondering, you just tell us a few things around your sort of ESG governance and what you've been doing.
Yeah, it's kind of fairly core to what we do. It's the way we've always operated. Back in, at Moto in the Congo, it was the same. There we had a clinic. We built a clinic, a birthing hospital. We did a lot of work there because, socially it was very degraded where we operated. And I guess that's, how we operate in Burkina. We don't have the budget that we had in Congo. But we work closely with the local community. We see ourselves as guests in their community. We may have the mineral rights, but we don't have absolute rights. So, before we even do anything, we sit down with the local communities and discuss what we want to do. And one of the key things for us is expectation management. I think it's pretty important. You don't want to disappoint people, because at the end of the day, you're exploring, and it's a very long journey from exploration through to first production. And not everyone's going to get a job, not everyone's going to have a direct benefit. So one of the keys for us is to be mindful of that and work out how we build our programs around that. And part of that for the stage of where we're at is, as I said, managing expectations, but making sure the money that we do spend benefits as widely as possible, and what we spend it on is done in consultation with our host communities. We obviously stick to the kind of the three main pillars, which is infrastructure, health, and education, and focus really on women and children, because in a way that women do a lot of the heavy lifting, and the children are the future. So we've built three, where our main camp is, we've built three school classrooms. We've doubled the student intake there from 80 students to it's well over 200 now. I think it's 240. We have a school food program there as well, where all the kids get lunch. The parents run that, we provide the food. And we've also had a project called the Sanutura Project, which we've done with a group out of Perth, where basically goods from Australia have been repurposed. So just for example, a law firm rebrands and they have 5,000 pens and pads that they don't know what to do with. So all of that stuff, we fill up a shipping container, we ship it, we distribute it locally, and that has quite a huge benefit. I think the first time we did it, I think 5,000 school kids benefited from it. I think the last lot we did, it was 2,000 kids, plus medical supplies and everything else that we bring into the area. So I guess to kind of sum up what we do is it's a lot of consultation and work with community, show them the respect that they deserve, make sure our employees follow same. We have community liaisons that we deal with if we want labour and things like that, so that they're the decision makers, not us. We've got a community garden where we grow our own produce, and excess goes to the school and the community. But I think the main thing is working in sync with the local community and try and get them to understand where you're trying to take the business and how they fit with that going forward. We see mining as a big enabler particularly in poor countries. There's a lot of people, are anti-mining and whatever, but these people have a right to a reasonable existence as well. It's not up to somebody they're in a city cafe sipping the latest style of coffee latte or whatever to determine what someone who's just living by subsistence means, whether they should have an opportunity or not. So we can't help everyone, but if we can enable the communities within the area of where we operate to grow, and give their kids opportunity, whether it's direct opportunity or through education, and it can only be beneficial. And then if those some of those people wind up in government administration or whatever, then we're equally happy for that because it can only help the country in the longer term.
Do you work with other mining companies like Endeavour around ESG initiatives, or do you tend to keep each company keeps their ESG initiatives to themselves and work with them, work with the local community on their proposals and work, or do you? I mean, do you meet up every so often to see what you can do for the local communities?
No, generally, my experience has been that companies do their own thing because everybody's got a little bit different approach and everybody's got different funding capabilities. I think everybody operates around the same three things, which is infrastructure, health, and education. But Endeavour's capability is a lot different to ours, so I think the themes are common, but the execution's different. I had 7 or 8 years on the board of a group in Australia called AMEG, which is the Australian African Mining and Energy Group, which is a lot to do with corporate governance, ESG, anti-corruption stuff and all that. So I was sat on that board for a long time, and a lot of I guess that was initially established really to try and help companies, particularly new entrants into Africa, give them a bit of a jump start on the whole ESG side of things, to properly manage that area, and also create a network for people to share ideas and communicate. So I think AMEG's played an important role, and one of its bigger roles actually I think is educating government in Australia and that who don't necessarily have the access to information that we do. But yeah, that's what that group has been set up for, and I think that plays a kind of key role, because the last thing a company needs, and what and the rest of us operating in the industry here need, is to somebody to come in and really mess up. It's bad for everyone. So that, I guess that's been my way of kind of approaching that side of things. Is Endeavour will do what they do, WAF will do what they do, Perseus will do what they do, and they've all got different financial resources to us. And then you have companies at our end where it's more about how you deal with the local community, treating them with respect, managing expectations, how you deal with government and things like that. So they don't cost a lot of money, but have very high impact.
Yeah. I've got a couple more questions. Obviously, you're in Burkina Faso at the moment. I just wondered if you could just tell us a little bit about the current environment and the sediment in country, maybe since the beginning of this year. Obviously, people within the mining industry hear many different stories, hear many different, obviously, different news outlets will portray Burkina Faso as probably a dangerous and not necessarily safe place to go.
Yeah.
Obviously, you're there now. What is the country like now? What's happening, and what do you see happening in the future?
Yeah, it's kind of an interesting question. We've obviously been involved in the country for over 10 years, so we've seen governments come and go. We've seen coups. We've seen changes in presidents and whatever. We've seen the insurgency in the north develop as well under the civilian government. So I guess it's kind of been, want of a better term, kind of an interesting journey. But I guess when I worked in the Congo, we had to deal with the Lord's Resistance Army, and when we first went in there, they were still disarming rebels, so it's kind of not new to us. But I think one of the key things with a country like Burkina, which isn't a small country, I think it's really important to understand the granularity of the security situation and what drives the problems in different areas. So there's obviously there's fundamentalism, but I think the ultimate driver is economic or money, right? So all through Western Africa. There's various contraband routes and illicit gold mining and whatever. And so people are obviously seeking to profit off of that. So it all gets quite a complex picture. But I think for people sitting outside the country that aren't involved, I think the thing for them to try and understand is the granularity of what's going on, where you can operate, where you can't operate, what you need to do to operate, and that's kind of one thing. And then I think from our side, actually operating on the ground, we did 20,000 meters of drilling last year. We were in the southwest. We didn't run any security. We don't have security on our camp. We should start drilling again soon, and then we probably will upgrade security a bit. And we've seen, bandits through the area come and go, be chased out or whatever by the government. So I think, operating here now is, to say that it's easy would be a lie. It is complex and it is challenging. But you can get things done. And I think if you look at Orezone, they've just brought Bombore on, that mine on time, on budget. Prior to that, WAF brought Sanbrado on ahead of schedule, on budget. Both are looking at expansions, or WAF's looking at a $500 million build at Kiaka, and Orezone's looking at an expansion. So I think, those companies demonstrate that you can get things done. You just have to manage accordingly. For us, it's the same, and probably the bigger challenge for us is with the various changes in heads of government. We've seen changes in heads of administration, heads ministries and stuff like that. So things that we've got held up, like permit reissues and stuff like that, they just get slowed down. The bureaucrats that we deal with, they're good. That's the same guys all the time, but it's the guys making the decisions above them. And then the government here is obviously very focused on dealing with the insurgency. I think from where we sit, they're probably making progress, which is good. Down where we work, they've been kind of proactive. We're seeing them be proactive in other areas of the country. It's still generating a lot of bad headlines. But I think it's the first time we've actually seen the government be proactive. The predecessor to the current president, I think he talked a lot, but I don't know how much he actually did. And the civilian government prior to that is really when things got out of hand up in the north. So there's a big focus on by the government here on getting things, back under control, and that permeates everything, every decision being made. So we have to be mindful of that, but we also understand what they're trying to do. And I think it's there's been various critics around the world because it's not a democratically elected government. They've got a few different countries offside, and maybe you're talking to a few countries the West doesn't like. But at the end of the day, the government's dealing with a pretty serious problem, and that they're trying to do something about it. So, but where I sit in where I'm in Burkina, I flew in the other night, just went through the airport in 10 minutes. Guys picked us up at the airport and drove back to the office, and just kind of get on with business. We had one of our local consultants in yesterday, and she kind of made the comment, and she's quite an international person, and she kind of made the comment that everybody looks at the country and sees it as all bad, but she just kind of shrugs her shoulder and says we just get on with it. So
I was going to ask, because obviously being in recruitment, I do get candidates occasionally say that if there's an area that they wouldn't want to go to, is Burkina Faso. So I just wondering if you could give any advice, if there is obviously people listening to this podcast that may be looking at a new opportunity, and it could be in West Africa, and it could be Burkina Faso, or even maybe Mali. Is there any advice that you could give them to, I suppose, reassure them that if they were going to consider a role in country, some of the things that they maybe they need to think about.
Yeah, look, I think they need to. I think first and foremost, they need to keep an open mind. They need to, understand where they're going to work, who they're going to work for, because obviously some companies are better than others, and some companies manage their risk better than others or differently to others. So if I was them looking at something, I wouldn't just blanket right off a jurisdiction, whether it's Burkina, Mali, Ivory Coast, Guinea, take your pick. Every jurisdiction's got its challenges. And I don't think it doesn't matter which one you go to, they're just different challenges. So I think if I was to kind of have any kind of counsel, it would be to make sure you fully understand the situation of the country, the situation on the ground, and have a frank conversation with the people who are employing you, but keep an open mind. And I think you just need to look at, where you're going to work and what that project's actually like and where it sits in the country. So, if you look at WAF and Orezone, they're both 100 kilometres from Ouagadougou. We're in the southwest of the country, so we're kind of different again. But I think if you're looking at going to these places, it's probably more the idiosyncrasies of working in Africa and the jurisdictions that you're at are probably a bigger challenge than what else is going on in the country.
And lastly, just wondering if you can give us the outlook for sort of next 9 to 12 months or the remainder of this year, what you guys are doing and maybe expect.
Yeah, one of the things I've kind of been doing in country here is just having a look at what we can and can't afford to do drilling wise. So we'll probably stick some holes in our kind of number one target at Bondi in the next couple of months. Historically there's some outstanding drill results there. So we'll get some holes into that. But really the main focus at the moment is to get this PEA completed. Obviously get that out into the market so people can see the value that we see in the project, and then lay out what the next steps are. So part of the reason for doing a PEA is to, I guess, make a call on whether we want to pursue a larger stick build that's probably a $150 million plus exercise with a couple more years of drilling, or go a phased development and accelerate, the project. I think the PEA kind of should answer that. So once that's completed, then that'll be setting out what the next steps are for us going forward, and then we'll need to look at how best to finance that. So one of the things the PEA will do is help us have more informed decisions with various groups that will fund the next stage, or will fund the development. But there's some groups we've spoken to that will fund some of the pre-development capital as well. So I think that'll be a big focus of ours between now and the end of the year. Once the PEA is done, and assuming it lands where we expect it to, we'll be looking at how we're going to fund the next stages of development and make sure the market, fully understands the value of the project. And then in the background, we'll kind of do a bit of drilling that's going to feed directly into the next step of the project. Probably the pre-development funding is probably going to be around $10 million because we obviously have to do infill drilling and work like that. But that'll really be the focus for the second half of this year. Once the PEA is done, is just working out what the next steps are, how best to execute them, and how to fund it.
Well, I wish you well for the rest of the remainder of the year. Really appreciate you obviously giving us an update on the project and obviously the company, and give us an update on the environment in Burkina Faso. And it may be not as bad as some of the news outlets portraying Burkina Faso is at the moment. It seems to be reasonably safe. Like you said, you need to do your due diligence if you were looking to visit the country. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? What social media platforms are you on?
We're on we use LinkedIn and Twitter. As you can tell by my lack of hair and colour of what hair that is there, I'm not really a social media junkie. But the best way if you want to get in touch with us is to probably go through email and go to info@saramaresources.com or go to our website, saramaresources.com. With the info email we check a couple of times a week. So if you send something we don't answer immediately, don't think we're ignoring you. It just, everything bombs into that. So we have to go through it and see what's in there. But that's probably the best way is to contact us through that. Or I'm sure if they know you, then I'm sure you'd be quite happily to forward them on to me as well.
Yep, certainly we can do that, and we'll include those details in the show notes accompanying this anyway. So,
we're always happy to talk about the project and give our views of Burkina. We try to be pragmatic about it. It does have its issues. I think the important thing is to understand it. There are parts of the country that's no go, but there's other parts where you can operate.
Yeah, no, and I appreciate you offering that advice as well, because I suppose it could be daunting for someone looking to consider that, and it just listens all the various news, and especially if you're searching for things and all you're seeing is sort of red flags. It's appreciate you obviously offering your advice if anyone does want to reach out to you and just get your take on everything that's happening at the moment in country.
Yeah, I think it's probably the most difficult part is there's so much like misinformation, or people just love to pile on stuff. Even the other day, Command Endeavour said they were, offloading some mines in Burkina Faso. So the headlines that were getting run everywhere was Endeavour's exiting Burkina Faso. And if they did exit Burkina Faso, they'd go from a 1.5 million ounce a year producer to a 640,000 ounce a year producer. So that's just kind of one example, right? I'm not speaking for Endeavour or anything like that, but the comment actually made by Sebastian was at the BMO conference, and I think he made it at a corporate update as well, was that Bungu and Wahignon, so two of their mines here, they'll look to offload them. And if you look at Endeavour, that's been their history. They buy and sell mines and continually upgrade their portfolio. So, so people kind of just tend to grab stuff and run with it. And, the only reason I know those things on Endeavour is because I've had questions continually on it saying, oh, this is bad, Endeavour's exiting Burkina. And so, I'm not inside the tent, but here's a few things that you probably need to look at. But, we're under no illusions that it's an easy place to work, but so it's got a transparent and modern mining code, and the government's pretty focused on dealing with the bigger problems they've got at the moment. So, they understand the importance of the industry, but at the same time, they're kind of fighting for their country, so you can understand why there's a lot of focus on that.
Yeah, well, really appreciate your time, Andrew. And those that are listening, I hope you enjoyed that episode. Please share this with other people within the mining industry, and I'm encouraging people to share this episode to people outside of the mining industry, because what we also want to do is not just educate the mining industry, but also educate those that are not in the mining industry, that because obviously we need to improve the branding of mining globally. So I do encourage you to please share it, keep sharing these episodes. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.